Welcome to Real Estate Coaching Radio, starring award-winning real estate coaches and #1 international best-selling authors, Tim and Julie Harris. This is the #1 daily radio show for realtors looking for a no BS, authentic, real-time coaching experience. What's really working in today's market, how to generate more leads, make more money, and have more time for what you love in your life. And now your hosts, Tim and Julie Harris.
Welcome back. Today we're going to be answering the question that we've been getting a lot in different channels about how to roll in the buyer agent commissions. A lot of people have been speculating that it's illegal, that what we're saying is incorrect. There was an article in Housing Wire that was kind of dancing around the issue as to whether or not it's the best thing for the case of the buyer. But what we're going to be doing today is we're going to be giving you the chapter and verse on why rolling in buyer agent commissions is actually legal, and we're also going to tell you how to go about doing it yourself. Now, I want to be very clear. When will you be asking the buyer to actually finance their own commissions as part of the transaction? Well, that's only when the seller's not willing to pay your commission as part of a concession towards the buyer, obviously, for the sake of doing the deal, right? There will be extreme examples, I imagine, where there'll be maybe hybrids. The seller will contribute a little bit in the form of buyer concessions, and maybe the buyer agent will finance the rest as part of their mortgage and things of that nature. But what matters most that you understand is that you can indeed have your buyer roll in your buyer agent commission into their mortgage. And there's a specific way to go about doing it. And unfortunately, a lot of this information is rather droll. Wouldn't you agree, Julie?
It is, but I think you guys need to be really clear on the facts, because this is something that will happen for you occasionally, and you need to know how to do it correctly. And we wanted to make sure you know that it is actually legal to, quote, roll the buyer agent's fee into the purchase price if necessary.
Now, where do you get the notes? And there are a lot of notes, and we're not going to be reading all of them today because, frankly, it is the information as it is presented from the FHA's websites and such is so boring that all of you would fall asleep, and a lot of you listen to us while you're driving. So we don't want that to happen.
No.
So what we're going to do is posting all of our notes, as we do for all of our podcasts, on our daily newsletter, which is harrisrealestatedaily.com. So just subscribe, just drop your email address into harrisrealestatedaily.com, and you'll get the notes from today's show, in addition to the notes for all of our previous podcasts. Now, it is also important to remember that you are easily going to have problems explaining this to your loan officers and to your buyers and to maybe even the seller's agents and all these other things. Because, the listing agents, if you're on the buyer side, so you want to print these notes off and have them at the ready so you can send them over to the listing agent, to the, loan officer, to the buyer, explaining all the nuanced differences, on this.
It's a reference.
Yeah, it's a reference. But it's going to be something that when you're putting a deal together and you ask the seller to contribute, so much money in concessions and some of it going to a, buyer's agent's commission, and, that buyer has to pay full asking price, if not a little bit more in some cases, I suppose. Well, how the heck is the house going to actually have, be appraised and all that, and include all these extra fees, as it were? And that's what we're going to talk about today.
That's right. And you said something that I think is the most important thing before we get into how to structure this and what are the factors that may go into it. And that is the importance of what the seller's net is going to be. That's where you should start your thought process. Not just with regards to your buyer agent fees being rolled in, but the overall deal, right? So if you're asking for closing costs and a home warranty and your fee, maybe your structure is going to be different than if you're just paying full list and you're asking for your fee. So keep in mind, whether the listing agent or the buyer's agent, that the seller's net is the most important thing when we're talking about all the elements that go into the contract, right?
Let's give an example, okay?
Sure.
Because that's where the rubber meets the road. So let's say, for example, you're writing a contract this afternoon, this evening, this weekend, on a $450,000 house. And let's say this $450,000 house has multiple offers, and the seller's not going to take anything less than $450,000, but the buyer might need some concessions, and maybe some of the concessions are your buyer agent commission. Okay, so the seller has to net $450,000 or you're not competitive. So what you're going to do is you're going to add up the concessions, and you're going to put them on top of what the offer is. Now, let me explain. So if the house is $450,000 and the seller, maybe the buyer needs concessions for your buyer agent commission, maybe they need some points, whatever it is. and let's say that adds up to 15 grand. Your offer is going to be for 465 opposed to 450, and then you're in the offer going to write that the seller to contribute this to this, this to that, and the other thing. As long as the house appraises, that's fine. And so that's going to be where a lot of you are going to be able to put these deals together that other buyers agents aren't.
That's right. So this means that you need to be following the buyer process that we laid out for you and that we teach in coaching, which is part of that process is counseling your buyer about price. In Tim's example, the house was priced right, and let's say there were comps to support it. When you are, quote, rolling in or putting on the top your fees and or other things, because it doesn't just have to be that. You can do that with closing costs or whatever. It still needs to appraise. So this is not a scenario where you would want to throw 15 or 20% on the top and expect the seller, because they're netting their 450. You can't push it that far. It still has to appraise, okay? So point number one in structuring this, you do have to be mindful of the potential appraised value. So you want to know what your comps are going into that, because lenders will only provide financing based on the appraised value or purchase price. The rule in lending is whichever is lower, okay? Now, next, I want to talk a little bit about lender requirements. Again, it is legal to adjust the purchase price. The lender has to approve the overall loan structure. Lenders typically finance the purchase price in standard closings, but some lenders have lender overlays or restrictions, which might be included, particularly if it impacts the borrower's loan to value ratio. That's the percent that they're putting down or the percent that they owe. Okay, so note to self. And again, this is not just about the buyer fee. This is anything where you're, adding a little bit on top, requiring them to put a little bit more, and we're talking about micro percentages more down. It might be, $500 more down, $1,000 more down, depending on the purchase price, right? So you have to be aware of that it's the overall structure of the deal, right? So if you've got a borrower who was on the edge to begin with, they've got shaky credit, they have a smaller down payment, and you're doing this causing them to change their loan to value, maybe that borrower is going to be subject to a little bit more lender requirements. Maybe your next case is the borrower is putting down 30%, everything else is fine, they've got good ratios and everything else, and they do this, the lender's not even going to blink. So it's a case-by-case scenario is the point.
Where this is really going to have, I think, frankly, where the changes to the commissions is really going to adversely affect the market. What market segments? Definitely first-time buyers.
Yes.
But you said something there a second ago, lender overlays. Julie, what's a lender overlay?
Okay, so a lender overlay is lender-specific. Not all of them are the same. It's where their risk management people have said, you know what, we don't really like loans in our portfolio that are only 3% down. So we're going to make everybody have to do 5% down. I don't care how good their credit is.
Well, but the important thing is if you go to the FHA's website, Fannie Mae, Freddie Mac's website, and you'll see a loan product that's 30-year fixed, 5% down, these are the requirements. You can visualize all this. That's just sort of the baseline requirements.
Yes.
And each lender's allowed to tack on additional, and it's not illegal.
Nope.
They're allowed to tack on their additional requirements on top of that. Those are called lender overlays, because what happens is if they do a loan and that loan goes bad, they actually have to buy that loan back.
Yeah.
So what they'll do is they'll actually make that, they're trying to cushion it so that there's less likely of a chance that they're going to issue a loan to somebody who's going to default. You guys get it? So lender overlays vary from lender to lender to lender. So when you're talking to a FHA approved lender, you better ask what the heck their overlays are, because lender A's overlays might not be as stringent as lender B's.
Yes, and they do change, right? So just because you knew what Wells Fargo overlays were for first-time homebuyers last year does not necessarily mean it's exactly the same. I'll give two examples. During the housing crash, there were lender overlays where they weren't particularly favorable to people in the housing industry. Appraisers, real estate agents, brokers, people of that nature had to put more money down. Why? Because we were in a housing crash, and the lender said, well, I don't know how strong your real estate practice is going to be, considering that we have longer days in the market's full of short sales, yada, yada. Right, that's one example. Most of that's gone away. Now, example number two, during COVID, there were lender overlays that were not favorable to people in the hospitality industry, because nobody knew how long COVID would last, and the hotels and bars and restaurants were closed down. Those are two examples of logical lender overlays.
Yep. So again, hopefully you're learning something today, that not all lenders are the same. All right, so Julie, you want to get some of this FHA stuff, VA.
I'm going to go to conventional.
Yeah, okay, conventional is good. But it's interesting because they're going to want to know what percent Oh, like how much can the concessions be from every transaction? Do you remember? It's 6%.
It's up to 6%. There, I think conventionally you can go up to 9%.
Yep.
Now, that is a quote rule. However, it's still subject to being able to appraise.
Okay, so what are we talking about? What is a concession? Hopefully you guys know that word by now. So concession is anything that basically, for example, the buyer writes the house. We're going to go back to our example for the $450,000 house, that there's $15,000 worth of concessions. So technically, as long as it appraises, no problem. And really in this market, that won't be an appraisal problem because it's, basically 15 grand. So I cannot imagine someone's not going to be able to get a house appraised over 15 grand. It's, when the market is continuing to inflate as it has been, or appreciate, choose your word.
It might have done that while they were pending.
Exactly.
Right?
So that's not going to be the issue. So where the issue is going to come in is, again, where you're talking about a lot of the added requirements. So the overlays. Now, some lenders are going to allow up to 6%, which means if the house appraises or the house is in contract for 450, you could hypothetically ask for another 6% on top of that, assuming it appraises, and that'll get approved in the loan. There's not, again, you have to adjust accordingly depending on who your lender is.
That's right. Okay, so what are the elements? This is kind of a combination of how to deal with a buyer side commission being rolled in, and things they need to know about rolling anything into mortgages, right? So when you are essentially changing the purchase price, or going over the list price, you're affecting several different things. Again, not by very much. We're talking about, we're not supposed to talk about percentages, of course, but we're talking about 1%, 2%, 3%, something like that. You're not talking about messing around with the price by much more than that in most cases, okay? But that said, what are you affecting? You're affecting the loan to value a little bit. You're affecting the ratios a little bit, and you're affecting the purchase price a little bit. These things work with each other to go into your loan pre-approval. This is why it's important that you have this discussion with your buyer during your buyer presentation. You guys are doing a buyer presentation, right? Up front, versus in the heat of negotiating, where you find out that maybe your commission, your fees are not really covered entirely by this particular transaction. Or maybe you find out that because you're competing, and maybe the other agents are going to do the same thing, you have to put all of this into the mix, that this could happen, and talk about it as part of your buyer presentation, that in the unlikely event that your fees are not covered through the listing, in that unlikely event, we may be able to roll it in on top. Here's how that would work. That's the time to talk about it, not at the 11th hour.
But it also adversely affects the buyer in other ways too. For example, it's going to
their
have
monthly payment.
Yeah, their monthly payment, obviously, but again, very small amount, especially with interest rates going down. But you're talking about possibly, an increase in their mortgage insurance, all their, different things. That's like
interesting.
That.
It could trigger PMI.
Right, exactly. Or it could make it so that they had been approved with no PMI because they're putting 20% down, but now because they don't have 20% down or whatever, now they're going to have PMI, and that's going to jack their payment up. Yes. So you got to really work with a really good lender is the moral of the story. Now, this is a good place for us to interject that we have been reading, as hopefully many of you have been, as far as have buyers, agents, commissions all of a sudden, been blown off the transaction and no longer are being paid by the seller. It's actually not. That's not happening. We're seeing actual evidence of actual closings that are still happening, paying virtually the same amount, in some cases more, on the buyer agent side of the transaction than they were. So thus far, there's not a precipitous drop-off in the amount of buyer agent commissions being paid.
That's right. And we're not just saying that. We have talked to our coaches every day. I have my private coaching clients every day. And for 2 or 3 minutes of every coaching call since all of this became official back in August, I have been asking them, what are you seeing? Because these are our boots on the ground reports. And I would agree with you 100%, especially in my latest, I'd say my last, 10 calls. I have no reports, that's 0 reports of any significant movement in either listing or buyer side commissions. And that's coming from new listings taken, because I ask those listing agents, what is your seller agreeing to? How's that listing presentation going? They say, here's the common thing. Most sellers are discussing the commission lawsuit settlement. They are aware of it. Not all of them have their facts straight, but it is a point of discussion for listing presentations. However, that said, that doesn't mean that they're agreeing to anything unusual. It just requires you guys to be more careful and more transparent, which was more skilled, which was the point of the lawsuit in the first place. Also on the buyer side, I have 0 instances of things being significantly. No, there is some negotiation going on, but that happened before the lawsuit.
Well, look, I'll give you less anecdotal evidence. Okay.
Sure.
So first of all, I think Redfin did a report on this, and they said there was no drop off in buyer agent commissions.
That's right. I saw one on Riz Media yesterday too.
Okay. Well, here's another one. We have almost 4,000 people in our EXP Realty group.
Yeah, that's a good example.
And we can see I can see transactional volume, and I can see the whole thing. I can see what the commissions are. And I don't have the drill down, to the extent that I would love to have it, but the reality of it is no precipitous drop off in buyer agent commissions. And it's also worth noting that there were so many doomsayers that were predicting that not only would there be a big drop off in buyer agent commissions, but there would be a big drop off in the number of agents. Neither of those things made sense to Julie and I. We've been saying that for a long period of time, that we think there'll be more agents in the business, not fewer. But moral of the story is thus far we have been proven correct. So that's always good.
It is really good. And here's how that plays into things. I think maybe some of this maybe is hope on our part that the dust is settling perhaps a little bit faster than people had predicted on this whole thing. And that's great because meanwhile, back in the real estate wilds, rates are already coming down. I checked this morning. I think the average is about 6.3. Housing Wire did a report with Logan this morning, Logan Motoshami, and he was predicting that we might inch under 6%, which is fantastic, especially going into the rest of the year. There's more inventory to sell. So most of the time in the past, a long time, one of the biggest objections from agents was, I'd have a bunch more people in contract, but I can't find a house for them to buy. Not true. And we do have evidence this week already that there's more mortgage purchase applications, both from resale and I had from coaching clients. The Kenmores told me yesterday, they're like, buyer sides are back because rates came down. And they're in a big first-time buyer market, and they would see it. They're kind of a bellwether market in my coaching schedule, right? So rates are coming down both on resale as well as the builders are reporting that their activity is up. So this is all good.
Well, because ultimately market forces always, rule the roost, right?
That's right.
And you still have an enormous number of people that want to buy and sell real estate. If anything, these higher rates have caused a lot of pent-up demand. And as rates fall and as inventory increases, there's going to be a massive increase in the number of real estate transactions. So guys, listen, for the first time in a meaningful way in probably the last 3 years, the wind is finally shifting towards being at your back. So embrace it as much as you can, and definitely have your mind locked into the fact that there's no doubt that next year is going to be a tremendous year, but your next year starts now. Don't wait until next year to start your next year in terms of lead generation and in terms of getting your skill set together. Do seriously consider joining Premier Coaching. It's your easy button, actually, to have an advantage in the marketplace. And again, I know a lot of agents, especially in fourth quarter, say, well, I'll get around to doing it in January. Why? Get your education in order now. Make it so you're skilled up now. Don't wait until, frankly, all the other agents are coming out of the woodwork. And then you're going to be experiencing a lot more headwinds yourself, self-imposed headwinds, because you're choosing to get back into action during a time where there's a lot of competition. If you do that this time of year, if you start generating more leads this time of year, generating more listing leads, generating more buyer leads, and frankly, attacking the market maybe like you never have been before, imagine how much power you're going to have rolling into 2025. I know it's only late summer, 2024, but I promise you every top producing agent on planet Earth knows what I'm telling you right now is the truth. Your new year has already started. Go to premiercoaching.com, or just text the word Premier to 47372, and you can join Premier Coaching for free. Again, go to premiercoaching.com, or just text the word Premier to 47372, and that is your easy button to get a huge head start on your new year and build tremendous momentum. And you'll feel your confidence returning, as well as, frankly, a lot of you are going to start teeing yourselves up to have your best years ever. Julie, you know what? Before you get to your next point, because you have a lot of points, we've been receiving quite a few very nice messages on Instagram, and I thought I should share this. Could you read this one? Can you read it all right? So this one is from Chelsea Sherman. I'm going to read you guys a couple really nice notes. I'm only sharing these with you, first of all, because we really appreciate, we get a lot of, bazillions of messages every single day. But when someone takes the time to write a really nice thank you note, basically, we feel compelled to share it with all of you because it's going to motivate you to realize that now is frankly, if you've been waiting for what it feels like to be in the right place at the right time, it's clearly now. So Julie, read this one, and I've got another one that we received this morning.
You got it. Okay, so this is from a fairly long-time coaching client, Chelsea Sherman, who writes, "Afternoon, Tim and Julie, I have to share this with you. I'm confident I'm not the only one, but for me, I'm eternally grateful to you both. My first year in real estate, I made $800. I had just had a baby and was slow starting because a lot of my energy was dedicated there. Well, understandable. My second year, $20,000, but even that wasn't enough to get our family above the 200% poverty line. This year isn't even over, and I've made over $110,000. Congrats. I own 2 homes. I am nearly debt-free, $20,000 more to go, off of state assistance, and my kids have never been happier. I have learned I can do this. Everything in my life has done a 180. Thank you and bless you." Well, bless you, Chelsea. Nice job. I mean, that's a fantastic testimonial, certainly, but it's because you did the work. So keep up the good job.
Here's the reason. What I was thinking about is the reason I thought to share her testimonial in particular, and the next one you're about to read, is because there are so many agents right now that are reading all the bad news in the headlines and thinking, "Oh my gosh, the real estate industry is, doom and gloom, and it's some sort of it's over, dystopian this, and all these other things," right? But here you have somebody who's locked into, frankly, taking advantage of what the market has to offer, and she's having her best year ever. She's building an amazing career for herself, and that reminds me of this next one.
Yeah, and think of what she's on track for because the year's not over and she's at 110. Okay, the next one is, "Tim and Julie, I thought I would reach out and give you both a huge shout out for all that you do. I recently retired from the military as of December 2023. I got my real estate license prior to retirement with the expectation that I would enter into real estate immediately after that retirement. In the year leading up to retirement, I enrolled myself into the Automobile University, the term we use for listening to things to help grow our businesses while in the car." I get that. "Riding around. You two were my go-to business coaches," referring to the podcast, I'm sure. "I dove into your podcast and learned as much as I could. Since retiring and entering into real estate full-time, I've been able to make a life-changing income for my family and I. In year 1, over 100,000 GCI. I can't thank you enough for driving home the need to prospect. It's astounding to me that how many agents are looking for the next great thing that will drive their businesses, like social media, podcasts, etc., when all it takes is directly connecting to sellers and buyers."
There's a little bit more if you can read through that.
I think this is your response.
No, it's not. Oh, yeah, it is. You're right.
That's okay.
Okay, yes. So if you want to send us a really nice note that's, that is heartfelt, that's designed to help other people that we can share on Instagram, please do so. You can post it over on Instagram or at Tim and Julie Harris, or you can always just text me at 512-758-0206.
And I like how specific those were. We get a lot of just kind of generic thank yous, which we appreciate. But anytime you can write so that you can help other people, and we'll read and highlight this on the podcast, when you can say, like he was talking about, prospecting, right?
Yeah. Well, more specifically though, I love it when the notes are stories.
Yes.
Where they're giving real life experiences, because then more people can relate
real
to
world.
it.
Mm-hmm.
But yeah, I mean, there it is. So that's what hopefully all of you guys are feeling from listening to our podcast as well. But remember, your next natural step is definitely to join Premier Coaching. Just go to premiercoaching.com or text the word Premier to 47372. All right,
okay.
Julie.
Now I'm going to highlight one more thing before we send you guys off to sell some homes. Because you can get the notes, as Tim mentioned earlier in the podcast. A lot of agents have either posted or made the comment that how's this whole putting it on the top work? Doesn't that make the down payment have to be a lot bigger? Well, let's look at the impact on a down payment. When the purchase price increases, the down payment amount also increases if it's calculated as a percentage of the purchase price, which in most cases, that's what the lender's figuring out. So let's take an example. Let's say the original purchase price is $400,000. And the buyer's putting down 10%. That's $40,000. Raising the purchase price to $410,000. So in this case, we're putting $10,000 on top, so that the seller in this case would keep netting their same $400,000. Let's go to $410,000 to include the commission. That would raise the down payment to $41,000. Buyers would need to be prepared for this potential adjustment. It's not a huge adjustment. They're already coming up with $40,000. Now they're coming up with $41,000. But this is exactly why you would need to discuss this early on as part of your buyer presentation, that this could happen. And in most cases, if you're doing this, in many cases, I don't know about most, but in many cases, it's going to be in this kind of first-time home buyer price range. I think you should be careful with everyone, but especially with first-time buyers.
Let's make sure we define that. The reason that we're mentioning first-time home buyers is because they're going to have, frankly, the least amount of money to put down, most
Typically,
likely.
yeah.
Because they won't have taken the profits or the proceeds from the previous sale, right? So that's where it's going to get sticky sometimes. And they're not necessarily going to have the wherewithal to be able to afford fluctuations in payments like somebody that's, say, moving up and maybe is a bit more financially established. I think that should make sense to everybody.
That's
But
right.
really, also remember that most of the mortgages out there right now, believe it or not, are actually government-backed loans. We should have researched this, or maybe you did. What percent of the mortgages out there actually are backed by Fannie Freddie?
I think it's close to 90%.
I'm remembering the same
It's
thing.
like 88% or something
Right.
like
When
that.
Julie and I sold real estate, it was like half that.
Yeah.
So I mean, and why? Because there was more. Frankly, Wells Fargo was issuing loans and maybe servicing their own money, selling off the debt. But now everything's basically insured by the government.
Well, also, don't forget, I think we have to mention this since we're talking about, purchase prices and commissions and things. I think it is still the highest amount of cash transactions ever recorded. I believe it's close to 30%, which is huge. When we bought and sold real estate, we always had, like, somebody paid cash. It was memorable.
But as far as that being a percent, it's still not that large of a percent. It's just that goes into the same bucket of when you hear these headlines about people saying, well, the big institutions are buying up all the real estate. By the way, we had a lot of comments on that because people were really, I think, a lot of people were really kind of upset that they had been led to believe that the reason that home prices are so inflated was because these, BlackRocks and Blackstones and all these other, evil entities were gobbling up all the single-family homes. And when they learned that it was less than 1% of all the homes in America, all the single-family homes of America were owned by big institutions, a lot of people were, I think, based on the comments I read on YouTube in particular, were quite surprised.
They were very surprised. In fact, funny you mentioned that. My latest CE class was property management. It was a big discussion on that Zoom session that agents were believing that this was somehow wrecking the housing industry, that all of these big, BlackRock type companies were gobbling up all the rentals and they owned everything. And so, of course, I had to clear the air on those percentages, but I would agree with you that people were generally surprised by that.
Well, this all goes back to the same thing. It's that you got to really be careful what you're listening to, because so frequently, and it's easy to check facts and whatnot, you just make sure you do your own homework, but everything's politicized because you got to think about it. Who's telling you that these big evil corporations are the ones that are gobbling up all the real estate and driving up home prices and making it so the average Joe and Josephine can't buy homes? Well, I think there's probably a political party that is trying to benefit from that kind of dogmatic speech, right? But it's just not true. It's just statistically not true. And look, and Julie and I, we avoid like the plague being political on this podcast. We're not trying to be political. What we're trying to do is get you guys to essentially be responsible and accountable to the things that you allow to percolate inside your brains. I think it's also worth mentioning, too, the word law has been used interchangeably with guideline, right? Now, what am I talking about? So this commission sharing lawsuit thing, it's an agreement between the plaintiff attorneys and essentially the MLSs, the plaintiff's attorneys and the MLSs. It's not, and you being a member of the MLS, right? So that's what it is. It's not a law. It's not an actual, I think there's, with regards to the buyer's exclusive buyer agency contracts and all that, I believe there's only one state that actually has that as a law. The rest of this has to do with the MLS guidelines that your local MLSs agree to. So I think Julie and I have conflated the word guideline with law in this podcast. And so if we caused any confusion, I apologize. But really, at the end of the day, it's a guideline. And, it's questionable. If you're not a member of the MLS, are you really, do you have to be, accountable to these new rules? Because it's not a law. It's not something that's going to be, you're not breaking a law if you don't follow this new guideline. You guys get the difference? So I guess, to put it mildly, we are in the very beginning stages of knowing how all this commission sharing lawsuit stuff is going to be sorted out. And it's going to, maybe a year or two, and then we're going to understand. One thing we're confident it isn't going to go away is I think there's no reason to believe that you're not going to have exclusive buyer agency contracts signed where there's going to be some, high level transparency about how the buyers, how you're getting paid and all the rest of it. That makes sense that that's going to stay part of the transaction. So you're going to have to be able to show your value and explain to the buyer why they're going to want to work exclusively with you. It only makes sense because that's the way obviously it's been done on the listing side since day one.
It's also best practices. I mean, there's that.
Well, for sure.
Right.
I mean, it is. And it's going to be the differentiator. I've heard people arguing that in a marketplace, what will happen is they're going to have these exclusive buyer agency contracts. And what's going to happen is they're going to, they'll sign them, and the buyers and the buyer's agent will sign it. And it's going to have a clause in there that says basically if the seller's not willing to pay the buyer agent commission, then the buyer agent will just basically suck it up and not get paid, right? So I've heard different terms being thrown around: no hook, exclusive contracts, things like that. So some people are insinuating that there's going to be some sort of civil war in the real estate industry amongst agents who are willing to essentially work for free, worst case scenario, and those who are going to insist on insist on buyers signing exclusive contracts. And again, I think this is a bit of a red herring argument as well. And Julie and I talked about this for quite a while, because Julie's original stance was, well, why wouldn't you include no hook agreements? And then I was thinking about, well, let's talk about on the listing side of things. So on the listing side of things, imagine putting the house, you have the listing paperwork signed, you're going to, you do all the things that you do to get the house sold. The house is in contract, and at closing, it just turns out that for whatever reason, the seller just decides not to pay your commission. You have, an agreement that says that if they decide to change their mind, not pay your commission, you're not going to get paid. I mean, that would never happen.
It doesn't make sense. And you wouldn't do that.
Right. And the idea that there's going to be a competitive advantage to buyer's agents who are willing to work with buyers for free, with the risk of working for free. Otherwise, that buyer's going to want to, because the idea is that if the buyer's choosing between an agent that's making him sign an exclusive and one that's signing him an exclusive with essentially an easy exit on the exclusive, the idea is that the agent that's offering the easy exit on the exclusive is going to have a competitive advantage. And hypothetically, that makes sense, but it's also a good way to go out of business fast, because you're going to find yourself working with a lot of the buyers that the agents who could get exclusive, the best buyers are going to want to work with the best agents.
Yeah.
And if your only USP to get a buyer to work with you is going to be that for whatever reason you are willing to work for free, that tells me that you're not very skilled in the first place. Otherwise, you wouldn't have to essentially, even have that as a consideration.
I agree. It's a weak move. It just is. To your point, if that's the only way that somebody is going to sign with you, you are probably not articulating your value. You are probably not using a buyer presentation. You probably don't have any risk reversal guarantees, things of that nature. And so here's the thing. You might try that. I don't think the market has much of a tolerance for that, because what is already starting to happen is the stronger agents, they report, a lot of them are in our coaching program, guys, and they say, yeah, no problem. I present the same way. I don't have different rules for different people. These are my standards. And yeah, every now and then I might lose a buyer who's not willing to sign for whatever reason. As long as I'm doing my job lead generating, talking to my past clients, I've got more appointments coming. I accept the fact that that is the highest level of pre-qualification. And now and then the buyer's not going to sign. I'm okay with that. That's what the strong agents are doing, because they're using a presentation. They're very clearly articulating their value. In fact, if anything, the buyer's saying, yeah, I know, I see it. Okay, let's get to it. Let's go see some houses.
Well, let's imagine sitting across from a seller, and the seller's basically saying, I know your normal fee is, whatever it is, but I'm not willing to pay it. Okay, well, you're not a customer of mine.
Right.
Next.
And you handle the objection, and you either prevail or you don't, and you say next.
There's so many people out there that want to transact with you, and why are you going to get stuck with the ones that basically don't want to pay you for your time? Doesn't make sense.
Well, doctors don't do that. Attorneys don't do that.
Yeah, exactly. Can you
your
imagine?
Dentist doesn't do that.
Can you imagine hiring a doctor to perform a procedure, basically, and there's a no-hook contract with the doctor? If for whatever reason the procedure's done, you just decide not to pay?
Yeah, I don't think that exists.
No, I don't think it exists either.
Yeah. So there you have it. Now, today we have talked about some different ways of handling the buyer side commission. I think that the main thing that's different is it's a bit more negotiable. It's more transparent. You have to have more documentation, and you have to be more professional. But this is one way, which is rolling it into the loan and being aware that when you do that, you're changing the purchase price, which can change some things like the loan to value. I just want to talk about one last thing with borrower ratios, right? So again, this is a combination conversation with a lender. That's okay. And in some cases, you may need to use these notes. Tim will tell you in a second again how to get them.
HarrisRealEstateDaily.com, and we're only going over maybe 30% of our notes. Julie did an amazing job preparing all this, because we knew that some of you were going to use this as reference material when dealing with your buyers and your listing agents and even some of your lenders. So definitely subscribe to HarrisRealEstateDaily.com and get all these notes. That's the only place all these long form notes are going to live.
Yes. So you may have to have a conversation with your buyer's lender, because because maybe they have yet to do a deal like this. It is legal. You just have to know how to do it. So when we talk about ratios, this will be the last little analytical piece. A higher purchase price can affect the loan to value ratio. Lenders typically want to keep the LTV within certain thresholds. For example, 80% for a conventional loan, sometimes 90%, somewhere in there. But raising the purchase price while keeping the same down payment could increase the LTV, which might trigger the need for private mortgage insurance, which would increase the payment. Okay, so you need to be looking at that and know the structure of your buyer's loan. The higher loan amount might also push the buyer's debt to income ratio beyond acceptable limits for the lender, reducing borrowing capacity or requiring more income verification. These are all things you don't want to do the day before closing.
Right. Well, again, strong buyers are going to be willing to go through the process of getting, all the financing set up. And that's one of the, some of you, we haven't been talking, well, I guess we talk incessantly about our new designation, which is the Ethical Real Estate Professional designation. And that is going to be specifically an A to Z complete business system for buyer's agents. That program is scheduled to come out probably the next couple of weeks. Again, I think we're going to hit a home run for all of you. You're going to essentially have a turnkey presentation, which is going to articulate your value. Julie and I are so tired of hearing that. I'm sure you guys are too. And you're going to have something that's going to essentially pre-sell to the buyer why they'd want to work exclusively with you. And it's going to act as your silent salesperson. Those of you who are in Premier Coaching, it's very similar to our pre-listing pack. In addition to that, you're going to have all the scripts, all the objection handlers. You're going to have lead generation ideas. This really is a standalone business system so that you can perfect the art and the science of working with buyers and, frankly, with these new guidelines. So if you want to be on the list to be invited to participate in the program, what we're going to do is we've got a list of over 500 of you, and we're going to send out a text. We're going to put an event together, a webinar or something. We're going to present what the program's all about. And the first 100 agents that enroll, those are the agents that are going to be part of the program. And then what we're going to do is essentially every 60 days, I'm guessing, we're then going to open the program up again. Why are we doing it like that? Because this is a coaching program. And for a lot of you, this is going to require a lot of hands-on, one-on-one help. So we don't want to overwhelm ourselves and our staff. So if you want to be included in this program, again, just get on the wait list. Text the word buyer, B-U-Y-E-R, to 47372. Text the word buyer, B-U-Y-E-R, to 47372. And you can get on the wait list, and then we'll invite you to the webinar. And if you choose to participate in the program and be one of the founding members, that's fantastic. But you at least should get on the list. Text the word buyer, B-U-Y-E-R, to 47372. So, Julie, getting back to this, I know with FHA, VA, and conventional loans, the LTV values ranges quite significantly.
Yes.
Like the max LTV, if I remember correctly, for an FHA loan is 96.5%. So can you tell the listeners what that means?
So that means ultimately that on an FHA deal currently, and sometimes they change this around a little bit, but right now, FHA borrowers have to put at least 3.5% down. That's where you get to a 96.5% loan to value. So
Right.
that means that if you raise the price a little bit, that 3.5%, the amount of money that is, goes up a little bit. Not a lot. We're only talking about 3.5% in the first place, right? But you can't end up doing less than that. Okay, so the numbers shift a little bit. Again, have a conversation with your lender so that they know that this is a possibility. Have a backup plan. If we end up going a little bit over the list price to cover the buyer fee, what is that going to do? Especially with somebody who's only putting 3.5% down.
Now, VA technically has no down payment, 100% financing. Now, though some VA lenders are going to have overlays, they're going to require a veteran to put something down. But if I remember correctly, and Julie and I aren't lenders, so lenders, you guys can correct me on this, but I believe it's the VA that allows for up to 9% concessions. I'm not positive.
I think that's right, but there's also a stipulation that is true. However, it still has to appraise.
Yeah, it has to appraise, of course. All right, so the last one, just so you guys know, is conventional loans are 80% LTV, and that's in order to avoid PMI, right?
That's
but
right.
your down payment, if you're doing a conventional loan, can frankly just depend on whoever your lender is and wherever their lender overlay is.
Well, so if you end up at 81%, that could trigger PMI. So you have to know what that spread is. What's that difference? Does that mean you have to put an extra $1,000 down or $1,500 down? It might.
Right.
So you just have to be aware of that. I know that this is a lot of mortgage language for some of you. We've done podcasts about the elements of a mortgage. What's the difference between pre-approval, loan commitment, pre-qualified? If this is making you feel tangled up with mortgage knowledge, keep in mind that every day in Premier Coaching, we have a daily live coaching session where you can bring your questions to our Harris certified coaches. You can say, hey, I got this deal. It looks like I'm going to have to put my commission in there. We're going to go over the list price by $12,000. How do I figure this out? What are the questions I need to talk to the lender about? How do I present it to my buyer? Help me understand all of these things. That's very common and typical that the coaches work on that with you. And if somebody brings that question, the rest of the group is being educated at the same time. So it's important that you go to your daily coaching sessions instead of saying, oh gosh, I don't know how to do that. I guess I'm not going to get paid on that deal.
So what would I do if I were all of you with this information? First of all, I'd definitely get all the, subscribe to Harris Real Estate. Harris Real Estate? What's it called again?
Daily.
Harris Daily. What's our newsletter? We have too many.
HarrisRealEstateDaily.com, I think is what it is. Anyway.
Or is that it? We write it down. It's over there. Why don't you grab that piece of paper?
Hang on. Back to you.
We're having to remember too many things. Well, here's what I do. Number one, definitely get these notes. Now, you want to use these notes for educating yourself, educating your customers, your loan officers, and the rest of it. But the other thing you got to keep in mind is that you're going to want to start really being picky about the loan officers you work with, because a lot of the loan officers out there aren't necessarily going to know how to structure deals like this, because frankly, mortgage lending for a long period of time has been relatively straightforward. There hasn't been a lot of complexity, certainly not a lot of concessions that were included in transactions. Many of you are learning about concessions for the first time. You've been in the business for 15 years, and for the first time ever, you're hearing about all this concession language. Well, it's just going to get worse from here. I have news for you. So, moral of the story is you're going to have to be very careful about the lenders that you work with, and make sure that they're super knowledgeable about all this. Just because your lender says they're actually approved to do government loans doesn't necessarily mean that they are. They might actually be taking those loans, taking the application, and then referring those loans out to their buddy down the street who is FHA approved. So go to the FHA's website. What is it? Do you remember off the top of your head?
I think it's all under HUD.gov.
Yes, and then look to see if the mortgage company is actually approved to do those types of loans. That's a good first step. The next step after that is you're going to have a cursory understanding of the mechanics of some of these mortgages, just so that you can, frankly, talk with your buyers about all of this. Welcome to the new world of exclusive buyer agency. You're actually going to be fairly well versed on all of this stuff. And then after that, by the way, you can just also give them this exact thing that Julie created for you, right, when you subscribe to HarrisRealEstateDaily.com. And what's then going to happen is you're going to work with the lenders, and the buyer process that we want you guys to work with is you're qualifying the buyer for motivation, the lender's qualifying them for financing, and that's really before you get them in the office, before you're actually presenting to them and asking them to sign an exclusive. Because if you find a buyer, you use our ethical real estate professional buyer pre-qualification form, you might determine just through those series of questions that that's not a buyer you want to work with. They're not that motivated, right? Maybe they're stuck in a lease for 2 years, or they're waiting for their beer can collection to sell on eBay, for their down payment, that kind of thing. Yeah. Well, okay, so let's just assume they do favorably answer all your questions. Next thing, are they actually working with a lender? So if you got a lender you trust who's doing a real pre-qualify on your buyers, and that buyer's submitting paperwork, doing all the things, well, you got a great buyer, don't you? You got a motivated buyer. You qualified for motivation, realistic expectations, and the buyer and the lender has qualified for their ability to get financing. But you've got to have a good lender that's going to work with you as a partner in making sure that you're not working with any buyers that are not ready, willing, and able to buy. I mean, it only makes sense. But so many of you have never had that level of professionalism. This is the reason that Julie and I, believe it or not, are actually kind of, favorable about these new changes in buyer's agency, because it's going to force the entire experience from the consumer side to become more professional. And this is what we really have our hearts tuned into, it's going to force all of you to be more selective who you work with so that you stop wasting so much time. You're not going to be able to fill your days with all these unmotivated buyers and then blame the buyers or blame the market for the fact that they didn't buy something. It's because you didn't follow, an actual proven system to determine whether or not they're motivated financially and motivated motivationally. Does that make sense, Julie?
It absolutely makes sense. So in the beginning, it's going to feel different and weird, and like there's maybe some conflict and confusion. That's because it's change, and it's normal to have a little bit of resistance to change, but you've got to move past that. The time for speculation and complaining about the changes is over. They've already been here for, a month or more, and it's time to take action on that, because the agents that have already done that and are ahead, they all have pendings right now. You can't live in fear of this, Inaction is an action. So you have to decide whether you're going to move forward and embrace the new changes and be the most professional version of yourself that you can, or if you're going to stay stuck.
Monday, we have an incredible, next podcast, we have an incredible interview for you, Mr. Robert Johnson.
Yeah, I'm looking forward to that.
Yeah, he's one, well, I've got to record it first.
I know.
So he's one of our, I think our highest profile success stories. And Robert is one of these guys. He was flipping homes, believe it or not, and he was in Greenwich, Connecticut. He called us right when he was in the midst of thinking about selling his pickup truck and getting a proper car for selling expensive homes. And he did it. And then we started coaching him essentially right from when he was a new agent. Well, technically not a new agent, but actually taking his license seriously. And he's now become one of the most successful agents, certainly in Greenwich, Connecticut, but maybe even the country. So that interview is coming up. It's on the next podcast. Remember, guys, we have well over 5,000 past podcasts. So if you're wanting to binge and get your education on, as many other of you have, they're all there waiting for you. You can go to iTunes, Stitcher, Spotify, YouTube, wherever you choose to listen to us. And please do remember, we live off the 5-star reviews on iTunes. So if you've not yet given us a 5-star review on iTunes with a pithy comment why you like the podcast, that is your way of saying thank you. And of course, if you want to write us a nice note based on a story, we'll be happy to share that on all of our socials as well as on the podcast. So please do consider your homework to go over to iTunes and give us a 5-star review if you think we merit it, and comment as to why you feel the podcast has been impactful on your business and personal life. Have a fantastic day. We'll talk to you on the show tomorrow.
This podcast is a part of the C-Suite Radio Network. For more top business podcasts, visit c-suiteradio.com.